Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Tuesday. What's up, everybody? It's Tuesday morning. Welcome to the Tuesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys all had an absolutely amazing trading day yesterday on a beautiful, beautiful Monday, as we saw the markets just kind of chop around a little bit. Not a whole lot of activity to report. But we definitely did have a little bit of adjustments that we had to make in some of our positions. So today we'll share with you a little bit about some of those adjustments and also show you the trade feed that we used in that update so that you understand exactly where that comes from. Real quick announcement: on Thursday evening, Thursday the 18th, we're doing a webinar for investing. What are we talking about? We're talking about the fourth quarter. What are some of the pitfalls that people run into, and how do we look at it from an investment standpoint? So this is not necessarily for traders, so share this with anybody that you know. They've got a 401k, they've got a money manager, anybody. This is designed to talk about the big picture wealth bucket and some of the things that are important to take note of. So go to tradersarmy.com/registration. That's tradersarmy.com/registration in order to register today. All right, let's go ahead and dive right in. So the S&P this morning, we are up just a little bit, basically flat from yesterday's close. And what you can see is that we are really just above that level that we had spoken about yesterday. We bounced off of there, came close to it again, and then just kind of has been chopping around. And we had set it as a confirmation entry, and it's not really, with this basing here in front of that level yesterday at around noon, it wasn't really worth the 2-to-1 when we came close to it, because we were basing here in front, which would invalidate the level. But then we moved away from it again. And so I've still got it here as a potential for an entry, but it's really lower probability at this point. I think the better probability would be a little bit deeper of a pullback. Looking at the 4-hour, we can definitely see that our upward momentum is starting to slow down just a bit, and we could get a rollover for a decent little pullback. Now, I still like the bullish opportunities, and I'm not willing to go bearish as of yet. But there's a chance that when we come down into here, that we'll base, and then that actually could make for a little breakdown opportunity if you're willing to short this close to the all-time high. So the level still stands, but knowing that it's a lower probability level. I still like this 15-minute little wick over wick area down here where we could see a decent reversal. All right, in the Nasdaq also continuing its rally higher. We are seeing, definitely there's a little tiny trend channel that's been formed, but it's a very, very tight trend channel in here. And if I look at this, from a bigger perspective, and I go to say like the 4-hour time period, we've got highs that are kind of pinching in like this, and lows that are a little bit more of that ilk, and so that's that tells us that we have a better opportunity for, once again, a little bit of a rest, a bit of a pullback, and then I think this is a good buying opportunity somewhere down in here. So all of these markets are pointing to the fact that we could get a pullback, but I'm not willing to short on any of these pullbacks until I get a quality reason to do so. Looking here on a 15-minute chart, we can see that we've kind of been rolling over in the overnight hours. And rolling over in those overnight hours means that the opportunity still exists for price to continue to pull back a little bit more. Once again, if you're willing to get short from up here, we are starting a little bit of potential basing right in here. If you're willing to get short this close to the all-time high, you might get a little bit of a breakdown opportunity below here. Once again, that is on your own personal preference. I am not a huge fan of getting short at this close to the all-time high, right? I say it all the time. Don't tug on Superman's cape. Don't spit into the wind, and don't short the all-time high. You definitely would be shorting the all-time high on a breakdown, so your stop would have to be fairly tight right up in here. But it could be a decent little day trade. All right, crude oil. So looking at crude, we had a confirmation short, or confirmation long, based on this little level right in here. And this became a confirmation entry because we came really close to it, moved away. When we came back down into it, we actually went through the level, which invalidated the trade. That's why it's important to read the trade feed. So those of you that are Traders Army subscribers, you know that we have a private trade feed that we update every day. And so in that private trade feed, we update some of the trades we're looking at. And this one, CL 15-minute demand area was set up as a confirmation entry and did not enter the zone, meaning we got to turn it off. So this is the this is how we monitor the positions that we may have set up and the areas that we may have for opportunities in our levels. So this level here, no entry on this trade. Now we did come back down later in the day and just give this a little bit of a touch and go off of this area. You may or may not have gotten filled on this little tiny level right in here. But we are now starting to move away from it as well. And so we did create, if I go to my 4-hour chart, we had a little bit of a weakening on the 4-hour. We are getting closer to putting in a little bit of an outside day, if you will, getting lower than the prior day's low. It may not make sense to trade until we get lower than the prior day's low inside of this position. And so if we do get something in here, now that we've broken kind of below here, we could get another pullback somewhere down into this region here off of the daily chart. So I'm looking at the bigger picture here. Well, I think that this actually sets up for a pretty nice little level right in here. So we may get a little reversal right in there. Now your stop would have to go above that upper wick, but that could be the place where you get a shot at a reversal somewhere up in here. Gold, look at this gold. Gold is just, we just keep pinching tighter and tighter and tighter in gold. And on a week, we've got geopolitical stuff happening all over the place. Gold's definitely going to break. I'm just not sure which way. And nobody is. Now, this little triangle here is a microcosm of the bigger picture triangle here. Right? That's all that is. It's a microcosm of a bigger picture triangle inside of here. So both of which are potentials. Now, if I look at this going much bigger, going to say like the daily chart, my bigger picture direction tells me that we should break out to the upside, but that doesn't mean that we will. As we can see a little bit later, triangles don't have a definitive breakout direction, but they definitely do, kind of show us that we're poised for a breakout one way or the other. So on this smaller, the smaller level here that we're putting in, this little smaller version of the triangle that we're putting in here at the end, it's 1, 2, 3, 4, 5 touches is what creates one of these triangles, and then it's a measured move, typically from the second touch to the opposite trend line. That's how you measure these triangles. That's your expected movement, is from the second touch to the opposite trend line. So if, in case we get that movement, it becomes one way or the other. If we get a breakdown, it puts us right close to this 15-minute level, and a breakout to the upside puts us right back at this high. So you can see where a breakout one way or the other might actually be a pretty effective trade to get to one of those key price magnet areas. All right, next, in the ZN, which is our bond level. So in the ZN, we were talking about the fact that we did get some basing right in front of the 15-minute zone, which technically would invalidate that level for us. It definitely weakens the probability. We got a little bit of a move away from it, but not a whole lot, and it kind of came back up. So we looked at that and said, it just the reward and risk may not be there. However, the 1-hour level that we talked about yesterday is still valid up in this region. Next, The Aussie. So the Aussie, we still have our 2 levels set up in the Australian dollar. Nothing's been added or changed since yesterday. We did get a little bit of a breakdown in the overnight. Technically, you may be able to give this a shot. You've got a little bit of a demand here that may make it a little bit weak and not a great breakdown, but you may be able to give that area a shot. In the euro, we got a pretty decent sell-off here just in the last little bit. We are coming close to approaching our reversal point here, which is the speed candle, the retracement of the speed candle. When I look at this, I would say that my first target would have to be somewhere up in here, which gives me about a 2-to-1 reward to risk, unless we base over the next few candles. If we base the next few candles in front of the zone, then it makes it less than a 2-to-1 reward to risk. So check your own rules on that trade. Canadian dollar, we're looking at this triangle pattern, and this goes back to speaking about you never know which way those triangles are going to break. This was a little bit of an ascending triangle into resistance, and I said it can break one way or the other. I anticipated it breaking it to the upside, and it did exactly the opposite. It broke out right to the downside. Now, going back to our measured move concept, right? Second touch, 1, 2, 3, 4, 5. Second touch, measured move, tells me that our breakdown as came back down to our opposing fair price value area, which is right about here, and so it still has a chance for the upper breakout to become valid, but we would need basing in front of that level. But that was the breakdown move on the Canadian dollar, was off of that little bit of an area. Next area of demand of any semblance of quality comes in down here. You might get a little move right in here off that little wick over wick area. But I'd want to see how we arrive back to this little level, this little wick over wick level right in here. Last but certainly not least, our Great British Pound and Japanese Yen. The pound also has sold off in the overnight hours just here in the last little bit. If we get a rally back up in this in the pound, let me maximize this sell here. If we get a rally back up in the pound, I like this wick over wick area here as a potential. Remember, these become speed candles, and speed candles have a tendency to get retraced. I like this little wick over wick area here, as well as this one up in this region here. So the wick over wick is in my mind a slightly better opportunity and a slightly better level than even the origin of the move. And then the Japanese yen, this is the Japanese yen level we spoke about yesterday. It becomes an area of demand. We got a nice bounce out of that level. Now it sets up for a potential break, right? It sets up for a breakout. Once we've hit that level a number of times, it could be a breakdown coming below this region as the next tradable opportunity. So tomorrow is our live trade room. Remember, Traders Army subscribers, we've moved our live trade room to Wednesday instead of Thursday, so no daily market commentary tomorrow. For those of you that would like to join us, go to tradersarmy.com today and use the promo code TRADEUP in order to get 60% off your first month so that you can take a look and see what we're all about. So hope you guys have an absolutely amazing day. I will talk to you soon. Later.